Bitcoin is a big deal. We're seeing the third largest rally since 2017 and have been in bull market territory for less than 1 month. Are you ready? 3 ways this Bitcoin bull run is different than late 2020. Bitcoin BTC is getting compared to late 2020, but this rally in fact has several major differences that make it not normal. According to Pete Humiston, manager of Kraken Intelligence Research, Bitcoin in Q3 2021 is a different beast when compared to Q4 2020. GBTC keeps its steep discount. Despite going from $29,000 to $48,000 in just 1 month, Bitcoin is still not seeing a frenzy of interest in buying. Higher price levels have seen solid support, but there is little evidence of the kind of demand that characterized the start of this year or the end of the last. A case in point is the Grayscale Bitcoin Trust GBTC, which continues to trade at a discount of around 13% to spot price this week. Even though Bitcoin has increased in price, GBTC demand has not entirely increased in step, and even the discounted rate is not being treated as a steal by many institutional investors. At the depths of BTC's price retraction, the GBTC premium stood at around 20%. Although up from its 20% discount set in May, GBTC is still trading at a big discount minus 10%. Humiston noted, funding rates lag price performance. 2 more factors singling out the current Bitcoin market structure are low open interest on Bitcoin futures and lower than expected funding rates. Both contrast with the start of the 2020 bull run and go against the grain, given the pace of price increases over the past month. Nonetheless, funding rates are now more positive than at any time since the May price crash. Bank of Ghana urged to resist developing a CBDC based on old traditional siloed financial thinking. A Ghanaian blockchain and crypto association, Afroblocks, has warned the Bank of Ghana to resist the urge to develop a central bank digital currency that is based on the old traditional siloed financial thinking. Afroblocks not consulted. Afroblocks instead wants the central bank to emulate financial projects that are borderless and decentralized like modern-day cryptocurrencies. According to Omar Majdub, one of the association's co-founders, doing this will increase the likelihood of the CBDC's success. These remarks by Afroblocks Majdub follow the BOG's recent release of a press statement in which it reaffirms the central bank's desire to be one of the first countries in Africa to launch a CBDC. As reported recently by Bitcoin.com News, the BOG has selected a Germany-based firm as its technology partner for its CBDC project. The firm, GSEC Devrient, is tasked with the job of providing the technology and a solution that suits Ghana's requirements. Still, despite the BOG's seeming willingness to engage with organizations that have the relevant experience and expertise, Afroblocks Majdub claims that Afroblocks has not been consulted. Majdub explained Ghana's unclear stance on cryptocurrencies. Meanwhile, the Afroblock co-founder also suggested that the BOG's continuing failure to clarify if cryptocurrencies and decentralized finance will play any role in their upcoming CBDC means there has been no change in the country's stance towards crypto assets. While Ghana does not officially regulate cryptocurrencies, this lack of clarity, unfortunately, creates an atmosphere that is not crypto-friendly, laments Majdub. How to survive unstoppable regulations coming to the crypto market. The Securities and Exchange Commission Chairman Gary Gensler proclaimed the crypto space to be the Wild West while calling for regulations to protect crypto investors. In fact, he is not the only one. Since the early days of Bitcoin, the crypto ecosystem was something close to the California gold rush days. Times that presented opportunities for making large amounts of wealth, but many times at the expense of a vulnerable few. No rules or regulations in place to protect the ones being exploited. Governments in both big and small countries around the world have been brainstorming for a few years to regulate the crypto ecosystem. Crypto regulation talks are heating up in countries like the USA, the UK, India, and more. Countries like Japan and China are ahead in the regulatory implementations, but are poles apart in their approach. Some nations have made progress in regulations, many are still holding talks, while a few have taken the route to ban. In all these 3 cases, there are a few key themes that have emerged: stopping cryptocurrency crime and tax evasion, stablecoin regulation, and the potential for investment vehicles like crypto ETFs and other funds. However, the crux of these themes, where most governments have the hardest hitting case for harsh regulation on cryptos, lies, and crypto's anonymous nature. They have two cases to make in this aspect, the first one being money laundering and the use of anonymity for illicit activities. The second point is that in some ways a decentralized global monetary structure can be a threat to a country's sovereign fiat currency. Whatever the motivation for regulation might be for the government, the investors need to recognize that the crypto ecosystem will slowly but surely get monitored, and they have to be prepared for it. There are a few approaches that crypto businesses and investors can take to reduce their risk exposure to regulatory uncertainties. Owning the private keys. Owning one's private keys is an important aspect of any truly decentralized platform, whether it be an exchange, wallet, or intermediary. In some ways, leaving the private keys in a location that doesn't let people own their private keys is like leaving a house to be taken care of by a caretaker. Sure, they may guard and maintain it, but it depends on them. There is a chance of failure from a single point. A few ways to own private keys is using online wallets like MetaMask or Atomic Wallet. One of the most popular ways to get complete control of your cryptos is to use a hardware wallet like Ledger. Use decentralized exchanges. In the era of regulatory uncertainty, depending on centralized exchanges might be the worst mistake to make. If a government plans to clamp down on cryptocurrencies, one of the targets will be centralized exchanges. It can already be seen happening with Binance's ban in countries like Hong Kong and Malaysia. Decentralized exchanges seem to be a better way to trade and transact crypto. Unlike centralized exchanges, DEXs don't need all the information to go through a single point. Instead, it's more like a peer-to-peer network where many points connect. This in turn offers privacy and control over the assets by taking power away from market makers and leaders like banks, lawyers, and brokers. Register a crypto business in a crypto-friendly jurisdiction. For large investors and crypto business owners, it makes sense to move to an already crypto-friendly jurisdiction rather than gambling on a particular country's lawmakers. The initial cost of moving the business setup might be high and time-taking, but it is a small price to pay if the decision makers in the country don't plan to be friendly towards crypto businesses. Some of the most crypto countries currently are Portugal, Malta, Australia, Singapore, Vanuatu, Estonia, Sweden, Switzerland, and El Salvador. Partnering with institutions. There is a case to be made that institutionally supported cryptocurrencies will be better than cryptocurrencies without institutional support. This is mainly because most large institutions already have the desired financial clearances from the regulators. Additionally, they might have lobby power that can help with desired crypto regulations if necessary. As an investor, it might make sense to invest in cryptocurrencies that already have a good amount of institutional partnership or have a roadmap for it. Cooperative business model. To achieve true decentralization, a company cannot just depend on one particular nation's jurisdiction. This is where a cooperative business model comes in. A cooperative is an association of people and organizations united voluntarily to meet their common economic, social, and cultural needs and aspirations through a jointly owned enterprise. Basically, through a cooperative, firms can diversify the legal risk quotient from one single jurisdiction. Privatium, a privacy-focused cryptocurrency launched in 2021, is taking this route to bring privacy to people. They are not only using decentralized technology but also bringing structural decentralization legally and organizationally. Privatium Initiative System provides integrations for fintech companies under the Legal Partners umbrella. The business model of the Union of Cooperatives is designed to extend financial services and asset management in the rest of the world. This mix of both legal and technical decentralization can be seen as one of the most innovative approaches to undertake the problems of bringing privacy to the masses while being compliant with the laws of multiple countries. People might not be able to control what exactly their regulators do, but they can be in charge of their actions. Investing and building on projects that can adapt to regulations, whichever way they go. $160 million worth of crypto shorts liquidated in the last 24 hours. The total market cap of crypto assets crossed the level of $2 trillion yesterday after a strong rally in altcoins. XRP, Dogecoin, Binance Coin and Polkadot posted strong gains within the last 24 hours. Due to the latest jump in digital currencies, liquidations across the crypto market have accelerated since yesterday. The latest data posted by Vibe.com shows that nearly $160 million worth of short crypto trading positions were liquidated in the last 24 hours. Approximately $55 million worth of short Bitcoin trading positions got liquidated along with $40 million worth of short Ethereum positions. In addition to Bitcoin and Ethereum, XRP, Dogecoin, Solana and EOS also saw major liquidations in the last 24 hours. According to Vibe.com, the largest single liquidation order happened on crypto exchange Bybit with a total value of nearly $5.85 million. Crypto market developments. Last week, U.S. Senate passed the infrastructure bill including key amendments to the cryptocurrency regulations in the country. Despite the reason that the adoption of cryptocurrency assets has increased in the U.S., there are still uncertainties regarding the potential outcome of the crypto amendments.